Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. Take a minute here to read over this disclaimer. Basically, it says that I am going to be talking about different options and or underlyings, but I am not doing that as a solicitation for you guys to buy or sell. I'm just here to teach you some different strategies and to teach you a little bit about the markets, but it's up to you to implement these different situations and strategies in your portfolio in your own way. And please keep in mind that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Not so much across the pond, but here in the United States, this is the day I was talking about, was our big economic data day. And we got final GDP quarter over quarter coming in at 2.9%, higher than the expected 2.7%. That means our economy is doing pretty well. And then we got GDP prices paid in line with expectations at 2.3%, which was expected at 2.3%. So we're not seeing a whole lot of inflation. And I've been talking about this lately, that the Fed's mandate is based on inflation going up. And we're not really seeing that right now. And then we also got preliminary wholesale inventories came in at 1.1%. Expected to be 0.6%. So rising inventories. That's good if we expect to move those inventories, but we aren't really seeing that inventory get moved because even last month's number was revised from 0.7% to 0.8%. So we're seeing rising inventories, which means they're not moving that. They're getting ready for, or they were ramping up for the market to take off. We're kind of seeing that show up in GDP, which is gross domestic product, that we're starting to get going. And maybe that's what the corporations or the manufacturers are looking at. So that's a really tough number to look at because they might be ramping up ahead of expected demand. So we got to keep our eyes on that one. But pending home sales came in at 3.1%, expected to be 2.1%. And they revised last month's number down from negative 4.7% to negative 5%. So a little bit of a revision there, not really making a dent in the better than expected number that we saw today. And finally, we got crude oil inventories coming in at 1.6 million barrel build, expected to be a 500,000 barrel build. No revisions to last month's number. One thing with this number is we did see, and we have talked about this in the daily market commentaries, how we could start to see those inventories of oil start to creep up as they're doing a lot of maintenance on some of these refiners. They stop production, do some inspections, things of that nature, upgrade things. That's this time of year. So we're getting into that time of year where they're not producing it over to gasoline. And with that being said, we did see gasoline inventories, a drawdown of 3.47 million barrels, and distillates a drawdown of 2.09 million. So we're seeing distillates and gasolines come off as the refiners are kind of slowing down on the production of those products, byproducts, and it's kind of in line with what we would expect. Nothing major to see here other than the overall crude oil market was coming off quite a bit on that build, but then I think they're starting to see the behind the scenes numbers where we're starting to see those drawdowns there. So we're seeing a build, but those buckets that we were filling up that nobody was keeping an eye on are starting to dwindle a little bit. Gasoline still at historical highs on inventories though, so don't get me wrong. There is still a plethora of oil out there. All right, on to the overall markets. Like I talked about, crude oil right now down $1 on the day. Yesterday was a confirmation of a top as we saw this doji here, confirmation to the downside, now continuing, but it's still looking like it isn't super bearish, don't get me wrong. It's still kind of muddling around. Gold on the other hand, down $17. Putin must be done buying, and not really a whole lot of inflationary worries out there, so that whole gold's coming off. We're also starting to see that whole dollar pick up. I talked about this way back. Remember when I started saying it looks like maybe we're going to see some emerging markets, some European slowdown. What does that do? Well, in the past, what we've been doing is we've been getting out of our dollars and into euros as those currency starts going up. But now if we start seeing a slowdown over there, people are going to be moving back into dollars. That strengthens the dollar. Strengthening the dollar lowers commodities. And we're starting to see some of that show up here also in gold. Putin stops buying and dollar gains value should cause some downside to gold. And that's what we're seeing. Most commodities should start coming off as that dollar starts strengthening. Grains are a little bit different story, but they should come off if we see the dollar go up. It isn't always the case with the grains necessarily. All right, yesterday with the Bitcoin, we came up and I talked about this area right here, this value area low is going to act as support. It's doing that. It's again taking another bounce on there. Yesterday's doji made it look like we may have found a bottom. No confirmation as of right now. We'd like to see this finish above this wick if we were bullish and wanted this market to go up. It's not right there yet. Bitcoin slightly up on the day by $20, but that's not really anything to talk about in Bitcoin for that matter. If it's not a couple of hundred points, it's nothing to really see, I guess. VIX futures moving slightly higher. We had a mixed bag earlier on today in the equities, but what we're seeing is consumer discretionaries, tech really getting beat up. I mean, Tesla is getting just massacred. Facebook wasn't doing too well either, but we're seeing tech come off and consumer discretionaries coming off. And that's part of the issue with the overall markets, as we'll see with the Dow Jones Industrial Average up almost 100 points, up 100 points right now as we speak, but very messy right in here. Just not a whole lot to try and figure out what's going on with the tea leaves. We're just getting a little bit of consolidation here. It's really stuck in the mud between the two Fibonacci levels on the 38 and the 50 there. So it's going to need to break out from there to have anything really change. NASDAQ is in negative territory, really struggling to get its, clawing its way, I should say, to clawing its way back. Today, got a nice little doji down here. After all of this consolidation and juking back and forth, that could be a good sign for the bulls. If you are bullish in tech, and that's the one that's really kind of been beaten up lately, as I talked about with tech, that's going to be heavily influencing the NASDAQ right now. But we are seeing a bit of a bounce since earlier today. That is going to have to be something we keep a real close eye on. If it closes like this, and then tomorrow we get a confirmation to the upside, that could look pretty good for the tech sector. All right, E-mini S&P is not as clear of a chart setup as we're seeing over there in the NASDAQ, but it could be a bit of an indication as to what's going on. Same situation where we juke back and forth quite dramatically, and that's actually good for the overall market. It shakes out some of the weak hands and allows the market to start to resume anyway. But right now, pretty hard to tell what's going to happen right here, as the E-mini S&Ps are not quite as clear of what's going to happen as what the NASDAQ is kind of leading us to believe right now, that maybe this is a little bit overdone at this point. But we can see what happened yesterday in the E-mini S&Ps. This, believe it or not, I missed all of this. And yesterday afternoon, my time, which is about, let's say 3 o'clock Eastern, it was about just afternoon, my computer crashed. And when I tried to reboot it, I pushed the computer back in as I was rebooting and the plug came out of the back. What does that do to your computer? Well, it caused a problem that I could not reboot my computer. There was a corrupt file in the startup, and I had to have some guy come out here early this morning and get this thing going again for me so I could get on with some trades. So I didn't do Lululemon as an earnings trade because my computer was crashed and I wasn't able to get out of my Tesla, which I was basically in the process of getting out of those short puts in Tesla. That cost me quite a bit more than what the guy to pay for somebody to come out to your house to fix your computer. So not so great, but we'll talk about Tesla here since we've already got it at top of mind. Let's look at Tesla. As you can see, Tesla just took a dramatic drop. Most of this lot happening after my computer crashed. Probably shouldn't cover those calls a little bit early, and those puts obviously much worse today than they were yesterday. So I pulled the ripcord on them. On those Tesla puts, and if you remember in that those Tesla puts I had on the April, and I was short the 200 puts. It was quite a bit of a loser in here in the Tesla trade. I think I ended up selling those originally for about 70 some cents and ended up buying them back for $3.50. That was a loser. Those calls that I sold and covered yesterday didn't quite cover this loss that we're seeing here today, but that's what we do. Those puts that I'm long, those long duration ones, those are helping out. So I'm still long the 2-year puts in Tesla for, and they're at the 150 puts in January of 2020. Some things that are coming out with Tesla is their autopilot. They're coming out and saying that they are pleading ignorance to the flaws in their autopilot, and their bonds are rapidly becoming junk bonds. I think they're jacking up to about 7% or something like that. Somebody said that Ukraine bonds are a better value than Tesla at this point. So that's part of this catalyst. We've got that statement coming out of Tesla. A lot of things bad coming, and some people were showing some of the new Tesla SUV where the doors come up and water just drains into the car. I live in Arizona. I have a buddy that has one of those cars. I haven't heard of that problem, but being in Arizona, we don't have a lot of rain. So that's about it for today, you guys. I'm sorry I don't have a whole lot to add as of yet, but like I said, probably 30 minutes ago, I got my computer up and running, and haven't had a whole lot. Well, actually, it was probably about an hour and a half ago now. Hour and a half, 2 hours ago, I got my computer up and running and haven't had a chance to add anything, just trying to get this thing humming. So that's it for today. Friday's webinar is going to be on the short straddle. High implied volatility is great for this strategy. And I'm going to talk about when and where to put this kind of strategy on. Everything's got pretty much high implied volatility right now. We thought we saw high implied volatility in the or before. We're seeing it now. 20 VIX may be the new 10 VIX. All of last year we were seeing a 10 VIX as basically being the middle of the road. It's starting to look like 20s could be the middle of the road for volatility for 2018, which is great for us premium sellers. And I'll talk about all of that in the webinar, when and where to put these type of strategies on. And if you can't take that, take it easy.